Hello and welcome to the Move Your Business Forward podcast. These talks are hosted by Boll, founder of Evoke Management and CEO of International Leaders UK. He'll be talking with experts from both these companies about issues that affect SME companies today. Today I'm here with Alan Miltz, who's a co-founder of Cashflow Story, and he's joining me from Melbourne, Australia today. Welcome, Alan.
Yes, good morning or good evening, Rob. So yeah. I believe it's absolutely sweltering where you are and freezing where I
am. I know it's meant to be 40 degrees in London today, which is unheard of. So it's going to be interesting for people there. So Alan, what I was keen to talk to you about today is obviously you're an expert and authority on helping companies look at their financial strategy, managing cash flow, looking at profit. And a lot of the stuff I know you do is helping make all this visual and giving people clear views of where they can take actions. And I thought a starting point, Alan, what would be your top bit of advice for any CEO of an SME or business owner at the moment? What do you think would be the top priority for them to focus on?
So thanks, Rob. I'm first going to give an introduction. Never before has cash been more important to business. Wherever I go in the world, I'm seeing the same problems: supply chain, inflation, and the ability to attract and retain people. So as a CEO, with supply chain and inflation, your cash flow is getting tighter, your margins are dropping, your inventory is probably going up if you're an importer, distributor, manufacturer. You've got to pay suppliers quicker. Never before has it been more important for you, the CEO, to ensure that people in your company understand the financial story and how they can do their job better to improve it. And Rob, it's about cash flow, not about profit.
Yep, cash flow. Yep.
Exactly.
Why do you say that? For someone listening to this, why for you is cash flow the top thing rather than just profit?
Every talk I ever give, I start and end the same way. Revenue is vanity, profit is sanity, cash is king. I'm speaking to someone in the UK, I should say cash is queen. So never before has it been more important in terms of a CEO being understanding that, yes, you might be profitable, but your balance sheet is being impacted at the moment. All the items I mentioned in supply chain, holding more inventory, paying people quicker, there are balance sheet impacts, and therefore there's a gap between your profit and cash. And what we call the solution is the power of one. So what I'm, I suppose, well known for globally is how do you improve your profit, your cash, and your valuation. There's only 7 levers that any company can play with. There are 4 profit levers: price, volume, cost of goods, and overheads. And there are 3 balance sheet levers, being collect faster, manage your inventory as well as you can, or invoice the work you do more frequently, and negotiate terms with your suppliers. These are the 7 inputs into cash. Every person in a company needs to understand how they can impact the power of one in almost every transaction.
So with that, Alan, then, what anyone listening to this thinking, okay, cash, gonna focus on my cash flow. You've mentioned the 7 drivers there. What's the first thing you would encourage them to go and do?
The first thing I do in any business is to educate the management team on the numbers. So the numbers belong to everyone. This is not about reporting. As soon as you talk about financials, cash flow, people's brains automatically say, my CFO does this. This is not about reporting. This is about improvement. The world at the moment is suffering from cash flow tightness. People's cash flow is getting more tight. Everyone in your company needs to learn how to improve it. And This reminds me again, I'm a massive soccer fan, and I was in the UK in 2016 watching the greatest sporting upset ever when Leicester City won the EPL. And everyone in Leicester City knew how to play the game better. And after every game, the team discussed the power of one. How many 1% changes can they improve? Your business is no different to a sporting match. There's a score. Everyone in your management team impacts that score. We need to teach them how to play the game, called the 7 levers, and we need to teach them to think about these 7 levers in their day-to-day activities, because it's the repetition of these changes that will change the DNA, the financial DNA of a company.
And with that education, Alan, I think one that, as you say, people go, well, that's not for me, that's finance, or that's not my area. I mean, how rounded a kind of education piece or effort would you suggest for the management team? And what would be your advice for helping engage people in management? Because in a lot of SMEs, you have people that, you know, are quite maybe siloed, or that they know their job, but they don't necessarily see the full bigger picture. So how would you suggest kind of really engaging and educating the breadth of the whole team?
So Rob, this is about simplicity. This is not about ratios. This is not about producing financial reports. This is about explaining to people what cash flow is in a non-financial way. Cash flow is the movement in your bank accounts. That's what cash flow means. It's the movement in all your bank accounts. The result of your business is your cash. Your cash is impacted by 7 drivers. There are 4 profit and 3 working capital drivers. So for example, if I'm a salesperson, I need to know what's the relationship of price to volume. Is it better for me to sell more at a discount, or to put prices up and maybe sell slightly less? If I'm a salesperson, when I make the sale, should I be educating the client about our payment terms? Operations, you impact the margin of a company. You also impact inventory, or in a service company, how frequently you invoice the work you do. Everyone in your company has got an impact on the numbers. We need, like the Leicester City, to teach the people how to play the game to improve the score. The training is about the power of one. The most non-financial person could learn how to play that game. The problem is, as accountants, the more complex we make reporting, the better we think we do the job. It's the opposite. Put the hat on of a non-financial person and speak to them with empathy.
And with that, how often, in your view, should a business be looking at this with the team? You know, what in the whole management team? Yeah, because a lot of SMEs, you know, I work with or see, they'll have a more formal board meeting. They might have what's called a senior management team meeting, but it's not always everyone involved. Yeah, how would you suggest you review this? How often?
So again, this is not about reporting. This is not about producing a P&L and balance sheet. Once a quarter, when you have an executive team meeting or a board meeting, whatever you want to call it, you will discuss, and people feel comfortable to discuss people, to discuss strategy, to discuss execution. But at that same meeting, you should be discussing how many 1% changes can we make to the way we run this business. Cash is a critical conversation in a quarterly meeting, and it's discussed or improved by workshopping the 7 levers and saying, for each one of these levers, where can we have a few 1% changes? So I sit on the board today of about 20 companies around the world. And one of my favorite business books of all time is Good to Great by Jim Collins.
Yeah, I've read it. They're a great book.
And then Jim discusses the flywheel. Imagine a 20 meters flywheel sitting outside a building, and you're trying to get this flywheel to turn. And it requires an enormous amount of energy. And when Jim Collins interviewed the great leaders and said, when did your flywheel start to turn? Everyone gave the same answer. I don't know. It was the repetition every day of making good decisions that eventually the wheel of success of your company starts to turn and it gains momentum. Your cash flow flywheel will start to turn by every person in your company every day with every transaction saying, which 1%ers can I change? And then the company says a year later, my cash flow is great. When did it happen? I don't know. So it's every single person in the company, like the Leicester City, should be trained how to play the game called the 1%ers. When will it improve? Who knows? But it's going to be the changing of the DNA of the company.
So Alan, that's great and really useful. And it just occurs to me that everything you've just said there, and that looking for the 1% makes perfect sense in normal conditions, right? You've got normal economic conditions, your market's kind of stabilized, and you're just constantly just trying to improve. But when we have these big either blips or shocks and things don't seem as they would be normally, and maybe we have the extremes of panic and uncertainty, what is the 1% enough, or do you think there should be some more extreme kind of measures and ways of looking at this?
So it's very interesting. Tomorrow I've got a board meeting in a very successful company in Melbourne. We're an importer, distributor, supply consumables to the construction industry. So you can imagine, we're importing, we're distributing primarily out of China. Our margins have dropped significantly because prices have gone up. Freight has gone up. We also need to hold a lot more inventory because shipping channels have slowed down. And our suppliers are saying, you better pay us quickly or more quickly than before. So it's like playing a game of whack-a-mole. On the one side, my margins have dropped, my inventory's climbed, and my overheads have grown. I now need to workshop with the team. What can we do with pricing? What can we do with volumes? We're holding more inventory. What can we do to get more volume out the door? What can we do to get the customers to pay us faster? So whenever you get one side of the lever impacted, your brain should be saying, what are the other triggers I can pull to balance the equation? The problem is people are only looking at one side of the equation. This is what's happening. No one in the team has got a remedy. Everybody in the team owns the numbers. It's not about reporting, it's about improvement. If you can gamify your business and teach people about the 7 levers and then show them, this is what's happened in our business. We got 3 levers that have been impacted in a negative way. Your team will then say, I've got some solutions. They're part of the solution, but you're changing the way they think.
That makes sense, Alan. I mean, with this, I mean, you're clearly incredibly passionate about just focusing on the improvement education. I mean, for you, what do you find most enjoyable about the 20 board meetings you attend across all these businesses? What do you enjoy the most about this process?
So I enjoy the most that people start off with fear, because through a DNA, we actually think accountants, the more complex they make the reporting, the more respect we get for them. And I'm a chartered accountant by training. And when people send me reports and a complex balance sheet and a source and application of funds explaining the cash, the average person around the table completely switches off. And that's why they say, all we're going to look at is the profit. The profitability is something we can understand. Revenue, margins, overheads, profit. You don't have to be a trained accountant. But a story of numbers is told over 4 chapters. Chapter 1 of a story is profit. Equally important is chapter 2, the 3 items of working capital. Are you collecting properly? Are you managing your inventory? Or in a service company, invoicing the work you do properly? And do we have the right terms with the suppliers? Chapter 3 is the rest of your balance sheet. In many cases, the fixed assets of a company. The result of a company is cash. The quick way to calculate cash is the movement in bank accounts. You will never understand chapter 4 cash by looking at chapter 1 profit. So what I'm saying is, if you can make your numbers simple, anyone in a company can understand. For example, if I say to someone in a company, we start off with 10,000 in the bank, we end up with 1,000 in the bank, what's your cash? Everyone will say, well, that's simple, it's minus 9,000. It's got worse. And then I say to them, okay, you're right, that's cash flow. It's the movement in bank accounts. An accountant will explain cash is they look at your profit, they add back non-cash items like depreciation, then they go to the balance sheet and they look at all the movements in the balance sheet items, and they give you a complex report that no one understands. What I'm saying, imagine if you could explain complexity in a simple way. This is your cash, the movement in bank. Can you now see that cash is bad, profit is good, for example, there's a gap? How do we fix cash? Well, there's only 7 things we can do. Price, volume, margins, and overheads, collections, inventory, and payables. And anyone in a company, whether you're the most non-financially literate person, through repetition, will get the story. And they will start to change the way they behave in a business. The problem is, Rob, we've never taught people how to play the game.
Yeah.
And that's my whole vision and passion for the last 25 years. Imagine if we could make the complex simple, how much better your business would be.
No, I get that. And I do think, it is a game, isn't it? It's and cash is a scorecard. And I do like that approach. I think sometimes though, a lot of business owners don't necessarily share that because it's not deemed as relevant to everyone. And I'm wondering how you seem best to kind of relate that to individuals, either on the management team or even lower down, because no one's necessarily incentivized based on the company cash balance, or maybe that should be how people start to be incentivized. What's your thoughts on how you motivate people?
So the first thing often that happens, companies say we don't share numbers with people. And I say that's fair enough. That's your philosophy. I believe in sharing and open book management, but many companies are not at that stage. And then I say to the CEO, the owner, would you like to do better? And the obvious answer is yes, but we don't share numbers. However, the power of one doesn't show your people your numbers. The power of one shows your people the impact of the change. What do the 1%ers do? And once you share that with people, no one is seeing your numbers, but they're seeing how they can improve the company. So if you said to me, and it's taking me 20 minutes to answer your first question, what is the number one thing I would do as a leader? I would start and implement the power of one. The power of one solves your financial issues, and it's so easy to implement. The power of one is basically the solution.
That's great, Alan. You just picking back on what you said at the beginning of this, you did mention another thing, which isn't necessarily numbers related an issue, people. I think a lot of people across the globe, here in UK, where you are struggling with people, any thoughts as to what people should be doing about lack of people available or the need to pay people more? Any thoughts on that?
Okay, so the other thing is, you will never achieve cash flow excellence without people excellence. That is, I can tell you, cash is the result. If you don't have a team of A players who know how to play your game and who want to do better in their job, you'll never achieve cash flow excellence. What I've done in a lot of the boards I sit on is to actually create a culture book. So the culture book defines who we are as a company. What are your values? So in other words, what do you stand for as a company? What is your purpose? Why do you wake up? Why do you come to work? Explain the privileges, the perks. Explain who your core customers are. So when someone wants to come and work for you, it's not, I've got a great job. Do you want to come and join us? You're joining a person or a company who you can relate to. You can relate to their values. You can relate to their purpose. And that's where I think a lot of companies have gone wrong. They haven't defined what is unique about them as a working place. Why are you the best place to work? Why would someone see your company as a destination? And companies who have clearly defined the people, the values, the purpose, their strategy, and you try and now sell the position, it's a far more tenable proposition to attract and retain. So I'm saying, yes, there's a problem. You can fix it. Yes, there's a major cash flow problem. Learn how to play the game. And people is no difference. Why would I stay? Because the world is changing. I've never seen an environment that's changing so quickly. People are reevaluating their life.
Yeah, no, I get that. I mean, the phenomenal amount of change we've had and continues to have. And we're just out of time. We'll need to wrap this up. I think there's some great things there as you shared, and some great thoughts. And for me, the big thing is educate the management team. Educate the management team on how to improve the cash position and measure it that way. I think that's a great tip. Alan, thank you very much. I've enjoyed talking to you today, and I'm sure we'll catch up again. So thank you, Alan.
Thank you so much for the opportunity. All the best.
Thanks for listening. If you'd like more information about the topics discussed in this podcast, then you can find us on our website at moveyourbusinessforward.com.